often rejected by Republican-appointed judges, including judges appointed by the former president himself, from state courts to the United States Supreme Court. Recounts were undertaken in state after state. Georgia counted its results 3 times, with 1 recount by hand. Phony partisan audits were undertaken long after the election in several states. None changed the results. And in some of them, the irony is the margin of victory actually grew slightly. So let's speak plainly about what happened in 2020. Even before the first ballot was cast, the former president was preemptively sowing doubt about the election results. He built his lie over months. It wasn't based on any facts. He was just looking for an excuse, a pretext, to cover for the truth. He's not just a former president. He's a defeated former president. Defeated by a margin of over 7 million of your votes in a full and free and fair election. There is simply zero proof the election results were inaccurate. In fact, in every venue where evidence had to be produced, an oath to tell the truth had to be taken, the former president failed to make his case. Just think about this. The former president and his supporters have never been able to explain how they accept as accurate the other election results that took place on November 3rd. The elections for governor, United States Senate, House of Representatives. Elections which they closed the gap in the House. They challenged none of that. President's name was first. Then we went down the line. Governors, senators, House of Representatives. Somehow those results are accurate on the same ballot. But the presidential race was flawed. And on the same ballot, the same day, cast by the same voters. The only difference, the former president didn't lose those races. He just lost the one that was his own. Finally, the third big lie being told by a former president and his supporters is that the mob who sought to impose their will through violence are the nation's true patriots. Is that what you thought when you looked at the mob ransacking the Capitol, destroying property, literally defecating in the hallways, rifling through the desks of senators and representatives, hunting down members of Congress? Patriots? Not in my view. To me, the true patriots were the more than 150 Americans who peacefully expressed their vote at the ballot box. The election workers who protected the integrity of the vote. And the heroes who defended this Capitol. You can't love your country only when you win. You can't obey the law only when it's convenient. You can't be patriotic when you embrace and enable lies. Those who stormed this Capitol, and those who instigated and incited, and those who called on them to do so, held a dagger at the throat of America, at American democracy. They didn't come here out of patriotism or principle. They came here in rage, not in service of America, but rather in service of one man. Those who incited the mob, the real plotters who were desperate to deny the certification of this election, defy the will of the voters. But their plot was foiled. Congressmen, Democrats, and Republicans stayed. Senators, representatives, staff, they finished their work the Constitution demanded. They honored their oath to defend the Constitution against all enemies, foreign and domestic. Look, folks, now it's up to all of us, to we the people, to stand for the rule of law, to preserve the flame of democracy, to keep the promise of America alive. The promise is at risk, targeted by the forces that value brute strength over the sanctity of democracy, fear over hope, personal gain over public good. Make no mistake about it, we're living at an inflection point in history, both at home and abroad. We're engaged anew in a struggle between democracy and autocracy, between the aspirations of the many and the greed of the few, between the people's right of self-determination and the self-seeking autocrat. From China to Russia and beyond, they're betting that democracy's days are numbered. They've actually told me democracy is too slow, too bogged down by division to succeed in today's rapidly changing, complicated world. And they're betting. They're betting America will become more like them and less like us. They're betting America is a place for the autocrat, the dictator, the strongman. I do not believe that. That is not who we are. That is not who we have ever been. And that is not who we should ever, ever be. Our founding fathers, as imperfect as they were, set in motion an experiment that changed the world, literally changed the world. Here in America, the people would rule. Power would be transferred peacefully, never at the tip of a spear or the barrel of a gun. They committed to paper an idea that they couldn't live up to, but an idea that couldn't be constrained. Yes, in America, all people are created equal. We reject the view that if you succeed, I fail. If you get ahead, I fall behind. If I hold you down, I somehow lift myself up. The former president who lies about this election and the mob that attacked this Capitol could not be further away from the core American values. They want to rule, or they will ruin. Ruin what our country fought for at Lexington and Concord, at Gettysburg and Omaha Beach, Seneca Falls, Selma, Alabama. What we were fighting for? The right to vote, the right to govern ourselves, the right to determine our own destiny. With rights come responsibilities. Responsibility to see each other as neighbors. Maybe we disagree with that neighbor, but they're not an adversary. Responsibility to accept defeat. Then get back in the arena and try again the next time to make your case. Responsibility to see that America is an idea. An idea requires vigilant stewardship. As we stand here today, 1 year since January 6, 2021, the lies that drove the anger and madness we saw in this place, they have not abated. So we have to be firm, resolute, and unyielding in our defense of the right to vote and to have that vote counted. Some have already made the ultimate sacrifice in this sacred effort. Jill and I have mourned police officers in this Capitol Rotunda not once but twice in the wake of January 6th. Once to honor Officer Brian Sicknick, who lost his life the day after the attack, and a second time to honor Officer Billy Evans, who lost his life defending this Capitol as well. We think about the others who lost their lives and were injured, and everyone living with the trauma of that day, from those defending this Capitol, to members of Congress in both parties and their staffs, to reporters, cafeteria workers, custodial workers, and their families. Don't kid yourself. The pain and scars from that day run deep. I've said it many times, and it's no more true or real than we think about the events of January 6th. We are in a battle for the soul of America. A battle that by the grace of God and the goodness and gracious and greatness of this nation, we will win. Believe me, I know how difficult democracy is, and I'm crystal clear about the threats America faces. But I also know that our darkest days can lead to light and hope. From the death and destruction, as the Vice President referenced in Pearl Harbor, came the triumph over the forces of fascism. From the brutality of Bloody Sunday on the Edmund Pettus Bridge came historic voting rights legislation. So now let's step up, write the next chapter in American history, where January 6th marks not the end of democracy, but the beginning of a renaissance of liberty and fair play. I did not seek this fight brought to this Capitol 1 year ago today, but I will not shrink from it either. I will stand in this breach. I will defend this nation, and I will allow no one to place a dagger at the throat of democracy. We will make sure the will of the people is heard, that the ballot prevails, not violence, that authority in this nation will always be peacefully transferred. I believe the power of the presidency and the purpose is to unite this nation, not divide it. So lift us up, not tear us apart. See, about us, not about me. Deep in the heart of America burns a flame, lit almost 250 years ago, of liberty, freedom, and equality. This is not a land of kings or dictators or autocrats. We're a nation of laws, of order, not chaos, of peace, not violence. Here in America, the people rule through the ballot, and their will prevails. So let us remember, together, we're one nation, under God, indivisible. That today, tomorrow, and forever at our best, we are the United States of America. God bless you all. May God protect our troops. And may God bless those who stand watch over our democracy.
The President of the United States with a very powerful speech, a unique moment in American political history, a sitting president with some very, very strong words for a former president. In the words of President Biden, not just the former president, the defeated former president. Biden blaming President Trump directly for the Capitol violence 12 months ago. With us on Capitol Hill, Bloomberg's Anne-Marie Jourdain. Morning, Anne-Marie.
Good morning, John. Yeah, after the president really painted our minds back to where we were a year ago, those images which surrounded our screens, he went squarely in and really teared into the former President Donald Trump. For many in his party, Jonathan, this would be a moment of solemnity and seriousness that we have not seen from the president in terms of squarely blaming the former president. And for some in his party, they will say he rose to that moment to make sure the blame was put on the former president, who still to this day talks about those unsubstantiated election claims. And President Biden had also mentioned that even the former President Trump's own attorney general had said that there was no election fraud. Then, of course, Jonathan, he really wanted to talk about the fragility of democracy, which the vice president did as well. And he brought that right into what is happening at this moment as well with the United States adversaries, China and Russia, and saying that those two countries would love nothing more than to see again what happened a year ago today.
Anne-Marie, we're not scheduled to hear from the former president, Donald Trump. We are scheduled to hear from him next week on January 15th in Arizona. What are you expecting to hear from the former president?
Well, the former president is going to talk about those unsubstantiated election claims. He still continues to maintain that the election was a fraud, and this is what President Biden was saying from Statuary Hall, the, quote, first big lie as he went through that. That is what the president is going to say, and he'll probably also, Jonathan, toy with the potential running of a next presidential election for 2024. He has alluded to this a number of times, but has yet to say whether or not he will run. He'll probably use his platform at this rally to once again allude to his supporters of whether or not he is going to do that again. And his supporters, I'm sure, triumphantly will want to hear that.
Anne-Marie, as you know, tomorrow morning, this will dominate the front pages of newspapers in this country. The day after that, maybe the day after again. Then into the weekend, as we get deeper into the weekend, it's the same issues. It's the pandemic, it's the economy. How quickly do they need to make adjustments there to have the success they want later this year in elections?
It's a great question, Jonathan, because really it's like the first 6 months of 2022 where this party needs to come together to get legislation done before they all go home and start those re-election campaigns, which we already know, and many analysts are saying that is going to be a red wave in November, and then it's going to be gridlock in Washington for the next 2 years. So they have about 6 months to really work through a lot of these problems. COVID is one of them. We've seen a lot of backlash on the White House and also the CDC for messy and really, unfortunately, some miscommunication regarding what you should do if you were contracting COVID. And then it's, of course, his landmark economic agenda, Build Back Better. Can he get it done? That has the president not just uniting the country, but he has to unite his own party, Jonathan, to get that massive legislation through.
Anne-Marie, thank you. MH down in Washington, D.C. From New York, a big focus, of course, on this market as well. About 14 minutes into the session, it's a very small bounce back on the S&P 500 by 0.4%. A similar move on the NASDAQ. If you look at the sector composition of this breakdown right now, energy top of the pile up 2.8%. Look to commodities underpinning that. Crude up through 80 on WTI. 82 on Brent. The other big sector with a big move higher, financials. The bank's doing nicely. The financials up by 1.34%. Underpinning that, the move in the bond market, 10-year yields up by 3 basis points to 173 on twos, up to 86. The whole curve, a shift higher on the 2-year yield up 3 basis points with payrolls Friday just around the corner. Coming up, Omicron cases surging around the world. Nations bracing for more policy changes.
The guidance has changed. It needs to change, but the communications from the administration as a whole have been challenging.
That's next. This is Bloomberg.
Billing at CVS Pharmacy.
This is Bloomberg's The Open. I'm Ritika Gupta, live in the principal room. Coming up, Richard Haas, the Council on Foreign Relations President. That conversation, 12 p.m. Eastern. This is Bloomberg.
On the issue of Mr. Djokovic, rules are rules, and there are no special cases. Rules are rules. It's what I said to you yesterday. That's the policy of the government.
What a story over the last week or so. Tennis star Novak Djokovic stuck in legal limbo over his vaccine exemption, navigating the rules around the world incredibly difficult. Australia, China, Hong Kong. In Hong Kong, the big banks once again tightening their rules, with Goldman Sachs and JP Morgan moving into split teams. To keep up with this is almost impossible. Bloomberg's Sam Fazeli tries to do that for us. Sam, I'm told it's all about the science, and then yet different countries have very, very different requirements of what's expected from you. Sam, 2 years into this, what's your conclusion as you look from country to country? Zero COVID in China, in Hong Kong, something in between somewhere else, open borders in other countries. Sam, does any of it make sense?
No, not at all, Jonathan. It's all mayhem. You look at one day, I'm traveling to the UK tomorrow, and I was all ready to go and take my pre-flight test. And of course, yesterday we were told we don't need that anymore, which I think makes sense. Why do I need to test if I'm going into a country that's already running at 2,000 cases per million? What difference does it make? I get it if they want to know whether I'm infected once I'm there. If there is a new variant running, then people want to try kind of control it. But we've also proven that doesn't work either. I mean, look, everyone put some African nations on the red list and nothing happened. All the Omicron cases came and everybody's dealing with it. So the world needs to get together and think this through properly. Zero COVID is not possible because of a variety of reasons that we've talked several times on this show. So.
Sam, when it comes to policy, I asked this question to someone a little bit earlier this morning. Let's focus on the policy here in the United States. At the start of this pandemic, we were told not to wear masks. Masks weren't effective, but that was because we didn't have many masks. And now we're told we don't need a test to exit isolation, but that's largely because we don't have any tests. And I'm left wondering, Sam, is it scarce resources shaping policy here, or the science, or a bit of both, Sam? Which one is it?
Well, I hope it's all driven by science, because at the end of the day, yes, right. If you don't have enough masks, you say that. You don't say you don't need masks, because that's nonsense, right? I think it's been very clear that regular testing is one of the easy ways of limiting the spread of infections, especially in a world where there's lots of unvaccinated people. So, but if you're in a world where many people are vaccinated, majority are vaccinated with triple doses, even then it becomes a bit questionable as to you have no symptoms, you test positive, should you continue to stay home until that test becomes negative? I mean, that's a question that I think you can probably solve with a mask. But the resources shouldn't be the reason. If it is, say so.
Sam Fazeli of Bloomberg Intelligence. Sam, just sterling work for Bloomberg over the last 2 years. We really appreciate it, sir, and more still to come in 22. Looking ahead into the trading diary, a key highlight is going to be payrolls tomorrow. To look at that, Mike McKee. Morning, Mike.
Good morning, John. It's going to be very interesting to see what numbers we come up with because of the Fed issue. They're saying that the economy is much stronger than it was when they started raising rates the last time back in 2015. Here's the comparison. And you can see we're adding jobs at about double the pace almost, and the unemployment rate already significantly lower. The big issue is how fast will people come back into the labor force. The participation rate was much bigger in 2015. But then again, this year, with participation rate down, average hourly earnings are high. So we're going to see some interesting data that the Fed will have to take into account.
Just as far as the Fed's concerned, Mike, let's talk about picks quickly. Are you expecting some Fed picks before the weekend?
There's a good chance of it. The White House has been promising us something would happen4for quite a while. The makeup of the Fed is going to have a lot to do with the speed of any kind of tightening. First of all, you've got four new voting members of the Fed rotation. Three of them, Bullard and George and Mester, are inflation hawks and have been. Pat Harker going to sit in for the missing Boston Fed president. And then we have 3 possible new Fed nominations, as you mentioned. One will be the vice president for supervision. Bloomberg has reported it's likely to be Sarah Bloom Raskin. Philip Jefferson, a Davidson College economics professor and former Fed economist, is in line for one governor's job, the Washington Post saying Lisa Cook, who is a dean at Michigan State University, in line for the 3rd. We don't know all of their monetary policy beliefs, but certainly the Fed we had when those minutes came out, John, is not the Fed we're going to have when they start voting on whether and when to raise rates.
Mike McKee, that's such an important final point. I'm looking forward to the coverage that Mike will lead through tomorrow on Bloomberg TV and on Bloomberg Radio as we anticipate payrolls Friday at 8:30 Eastern Time. Up next, your trading diary from New York. This is Bloomberg.
Smartphone wallet apps, Fobi AI.
26 minutes into the session, we move lower just a little bit on the S&P and on the Nasdaq. The Nasdaq down 0.2%, the S&P down 1/10, led by, what are we seeing? The financials and energy, top of the pile, bottom of the pile, everything else. Those two sectors not enough to lift the index, underpinned though by higher yields and better energy prices. Let's get to the trading diary. It looks like this. ISM services coming up at the top of the hour. San Francisco Fed President Mary Daly speaking a little bit later. Jim Bullard speaking too. More Fed speak coming from Daly and Bostic on Friday, and finally your main event tomorrow. It's the first payrolls report of the new year, the payrolls report for the month of December from New York. This is Bloomberg.
strongest.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Thursday, January 6th. Here are the top market stories that we're following for you at this hour. It's the Fed fallout, bonds battered, markets whipped, risk parity under pressure as investors reprice a more hawkish Fed. Is tech trash in 2022? And is it full employment or just too much churn? Several Fed officials believe the economy is near maximum employment. We are just moments away from the latest real-time read on the economy with Services ISM. And Biden blames Trump. The current president accuses the former president directly for the violence during last year's Capitol insurrection. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, we're breaking those numbers right now.
Absolutely. The ISM Services Index comes through significantly weaker than anticipated, through at 62. Now, 62 is a pretty punchy number. It is still incredibly elevated. Remember, 50 is the kind of contraction line you want to look at if we dip below that. So we're at 62, but last time we were at 69.1. The survey was 67, Alex. So this looks like a weak number. Is this the Omicron effect that we are seeing in the services sector?
All right, let's get to the factory orders. This is for November, so it doesn't really account for Omicron. But factory orders overall up 1.6%. But if you back out transportation, we're up just 0.8%. So that was definitely a miss. But then again, you know, it's 2 months backward read, so it's hard to really put that into the real-time economy when it comes to then the virus.
Yeah, we're also getting details of what is happening in the mortgage market. This is obviously post-Fed. The market is looking for higher rates. We are seeing mortgage rates surging to their highest level since May 2020. When did you fix, Alex? What was that number?
Oh, I fixed in November of 2020, and I fixed it 2 3/4. Thank you very much.
Feeling pretty happy about that. Let's dig into the details of all of these numbers. There's one person to do that with. We're not going to gloat too much on that number. Bloomberg's Mike McKee, over to you. What are we learning here?
Well, we're learning that Alex better not give out her address, or a lot of people who are trying to get mortgages today are going to be really upset with her. That's something that the Fed has been expecting, and it is something to keep an eye on because it may start to cool the red-hot housing market, and that might start to cool a little bit of inflation. But the inflation number in the ISM Services Index is interesting because it went up, even though the overall index went down. We're seeing prices paid at 82.5 from 82.3. So there are still inflation pressures in services, and this may be paying for some of those employees higher salaries to get them to come back to work. But interestingly enough, and Alex pointed out, this is a December number, comes when Omicron was in place. Employment drops 54.9 from 56.5. It still means that we are hiring, but we're hiring at a slower pace, and that does not match up with what we saw from the ADP number yesterday. So that's going to be really interesting going forward.
All right, Mike, hang with us because we have the question of the day, which is tech trash in 2022? And we asked that question because NASDAQ is now up another 0.7%. It has been a terrible 4 days for tech stocks, particularly the NASDAQ 100. Romain Bostic, co-host of Bloomberg Markets The Close, is also joining us. Hey, Romain, I know you guys were all over this yesterday, too. Yeah. What are we looking at here? Like, are we looking at like NASDAQ just off its highs here and this is normal? Or are we looking at something more shifty here?
It's a little bit more structural, a little bit more fundamental, and I think the key word is fundamental. Remember, we've been basically ignoring fundamentals, at least most market participants have now for the last couple of years because of that sort of full-on embrace by the Fed, whether it's real or by perception here. But now, of course, as that accommodation is perceived to be lifted, coming down in 2022, you have to look at some of those multiples, some of those valuations. A lot of these tech stocks, they have no earnings. So if you're trying to look for a PE, there is no E to measure that PE. And those that do have an E, well, think about this. You're paying 30, 40, 50 times earnings for some of these names in the NASDAQ 100. In fact, some of the big names in there have triple-digit price-to-earnings ratios. And if you look at it on a price-to-sales basis, it's not much better. You're basically paying almost 10 years out for some of these names on a price-to-sales basis, and that's really what's concerning people. With a higher rate environment and a less accommodative Fed, can those multiples stand up?
It's all about how high rates go. Ultimately, I think that's the question the market's trying to figure out here, Romain.
Yeah.
Mike, let me come to you on that issue. If we do QT, if the Fed decides to reduce its balance sheet,
Does that mean that the terminal rate doesn't go as high? And if so, is that maybe a silver lining here for the tech sector?
Well, it could be. The problem is nobody knows at this point exactly what impact the Fed's rate moves are going to have or balance sheet moves are going to have. They can anticipate that it will slow the economy and bring interest rates down some, but how much, we don't know. Part of it because of all this fiscal stimulus that went into the economy over the last 18 months. We're waiting to see what happens with consumers. Do they really pull back? The minutes yesterday didn't add anything new to that debate, but for some reason the markets decided it did. They gave us the prediction for 3 interest rate moves back in the dot plot at that meeting on December 15th, and they also suggested that interest rates are going to be or inflation rather, is going to be higher than they had thought back in September.
Can I just interject though, because I think one part of the reaction that we saw yesterday had to do with the perception, Mike, that the Fed was moving faster than I think what a lot of people thought they were. I think there seemed to be some people in this market that thought this was going to be much more of a gradual process. You have, of course, the taper, then you have some sort of rate hike cycle, and then maybe potentially a runoff on the balance sheet. And there seems to be, whether fair or not, a sort of a reassessment here that maybe all this is going to be packed in much more towards the first half of the year rather than drawn out over maybe a 2-year period.
And which raises the question, guys, is that how can someone come in and buy the dip? I mean, Goldman Sachs talking about how hedge funds were selling technology pretty hard. I just want to point out some market action for today, guys. You got Rivian down 12%. Rivian was already getting hammered with EV stocks. GameStop down another 6%. AMC also down by 6%. And I'm just curious as to like the positioning, right, in the market from the hedge funds, from the retail investors, Romain.
Yeah, the positioning, and look, I mean, partly to Mike's point and partly to your point, though, is that there are still economic fundamentals here that do suggest a stable economy and one that's going to be stable enough to support some of those companies. All the names you just mentioned, I guess they would fall, for lack of a better word, into some sort of degree of instability with regards to their fundamentals. Why are bank stocks still getting bid, though? Why are material stocks still getting bid? There's still a bet here that you are going to have a strong economy. The Fed is going to spook a lot of people, but I think people feel that when you get to the other side of this tightening cycle, or at least you start to get the start of it here, maybe people will reassess and find something to actually buy the dip from.
Romain, what do people do, though, if they're selling tech? That, I think, is one of the key questions. Do we just do what we've been doing, which is rotating to other parts of the market? And does that rotation have the same effect at an index level? The market had got very narrow into tech. Big name tech has really been the place to be and the only place to be in so many ways. But below that, we've had this ongoing churn within the markets. Yeah. Is that what persists here? If tech is trash for 2022, is that meaning that money goes elsewhere? Or does it go to cash? Does it go to bonds?
Yeah, I don't have
an alternative.
That's a great question. I don't have a definitive answer, but I'll tell you this. I mean, you know what we saw last year. It was basically a rotation. Money wasn't necessarily flowing out of the market. It was just rotating around. I think what we've seen in the first few days of this year and even the last week of last year is money coming out. You see that reflected not only in some of the ETFs that track equities, but some of the ETFs that, of course, that track bonds as well. The question is, how long does that money sit on the proverbial sidelines before it comes back into the market? That question, I don't know. I think you may have to wait until January 26th before people maybe feel a little bit more comfortable coming back in.
Well, Mike, which I think then brings us, full circle back to the Fed here. And just for some insight, we're looking at NASDAQ 100 off another 0.8%. The NASDAQ slipping really hard after that services number missed, but inflation still higher. That equity index now down by 1%. How much of a tech tumult is the Fed going to be able to handle?
Oh, quite a bit. As Romain said, we've got some elevated asset prices, shall we say. And the Fed knows that, and they know that those stocks are probably going to go down. But as he pointed out, bank stocks, they benefit from higher interest rates, and so bank stocks are going up. It's not going to be the overall market. We may get a correction, but the overall market isn't going to die because the Fed moves 25, 50, 75 basis points this year. It's the financial stability aspect of it, they're watching, but they're not too concerned about it.
Okay, but just worth pointing out, actually, as I see it come onto my screen, Rivian now down 16. It's below 78, which is the IPO price. So we're getting some fairly punchy price action, particularly at the less profitable end of the tech spectrum, let's put it that way. Mike, what about financial conditions? If the market falls out of bed, say we get a 10% correction, say we get a 15% correction, that's going to have an impact on the FCON function on my Bloomberg screen. How does the Fed react to that? Is it less focused on financial conditions in the way that it was, say, 12 months ago?
Yes, it's less focused because financial conditions have improved a lot, and we are still extraordinarily loose in terms of conditions. There's a lot of cash out there. The Fed's going to obviously follow that, and Jay Powell talked about this at the December 15th meeting press conference when he said if the economy comes out slower or starts to slow down, then we'll adjust our pace of monetary policy as well. The Fed is not promising you they're going to do 3 rate hikes starting in March, although the market may want to think that today. They're saying that we think the way the economy will evolve, you'll probably have 3 rate moves over the course of the year. But if the economy is faster, we could raise more. If the economy is slower, we could raise less.
Yeah, we're nearly pricing 4 at this point. We're not too far away from it. Guys, thanks very much indeed. Really appreciate the time as ever. Bloomberg's Mike McKee and Romaine Bostick. We're going to carry on the conversation, Alex. Next, we'll be putting this question to our guest. Is tech trash in 2022? Julie Biel joining us, Kane Anderson-Rudnick, portfolio manager. That conversation's next. Stay tuned. This is Bloomberg.
Powell said during the press conference very clearly they were going to go.
Is this a meaningful shift to the place where the Federal Reserve is going to raise interest rates so rapidly?
I don't think that they'll be as hawkish as they were in December.
This is the early stages of a tightening cycle, and as we know, it's usually not the first rate hike that matters. It's usually the last one.
A few hikes with real rates still being quite low and likely to remain quite low is still a broadly accommodative backdrop.
Will the Fed really permit real yields to get back into positive territory, and how will markets respond?
They're trying to create a policy that gets them on the right side of the curve. And I think that came as a little bit of a shock to the markets.
We should expect volatility to return to markets.
We're seeing orderly volatility in the marketplace.
We're in the early stages of sort of a re-rating, if you will, on where treasuries are based upon a new appreciation of Fed policy.
Yeah, no kidding. You're looking at 2-year now at the highest level since March 2020. We've seen a 22 basis point move in the 10-year real yield in just the last 2 days. Those were lots of our market voices over the last 24 hours reacting to the Fed minutes, which leads us to the question of the day. Tech being taken out to the woodshed. You're looking at tech down by about 1 percentage point. Is tech trash for this year? Joining us now, Julie Beal, Kayne Anderson Rudnick Portfolio Manager. Julie, that's the question. Is tech trash?
I mean, that's like saying, like, are all brunettes brilliant? And no, they're not. Like, this one isn't. So, you know,
I'm blonde. I feel you.
That's what I'm saying, right? So I think you have to show some discretion in being able to choose what you're investing in. Companies that, a software business that has strong fundamentals, high levels of recurring revenue, strong profitability, that's a great business. I want to own that business. An EV company is not really a tech company, right? It produces batteries and cars, so there's no reason it should be valued like a software business. And I think that's what's going to happen is it's not tech writ large, it's being choosy among the businesses that have strong fundamentals versus those that just have high-flying valuations.
But big tech, even some of those software names are long-duration assets. The valuation of Apple, Microsoft, these are stable businesses, yet they have seen so much money pour into them, Julie, and as a result of which, how exposed are they to market volatility?
I think anything that's been super over-owned and has seen a very strong recovery in its share price is vulnerable, right? We are all looking for the opportunities, and when we buy a business, it's with the expectation that the earnings can compound from here. And when you have these software businesses that are trading at very, very high valuations, that takes away from your earnings potential, right? Because you're not going to get multiple expansion from here. So I think it's really important to focus on the fundamentals relative to the valuation. There is no asset that's so fantastic that price doesn't matter. Price always matters.
Well, then let's ask the reverse question. Do you need to buy the dip? So Mark Hafele over at UBS, he had a note out saying the dip in stock seems a bit overdone. The normalization of Fed policy shouldn't dent the outlook for corporate profit growth, which remains on solid footing due to strong consumer spending, rising wages, and still easy access to capital. If you agree, what do you buy in a day like today?
Well, I don't fundamentally agree. I think 2022 is actually pretty challenging if you're the average CEO. You have rising input costs, you have rising wages, it's going to be more expensive to borrow capital. So I think it's actually a pretty challenging economy looking ahead. We don't have the level of fiscal support that we have had over the last 2 years. So I don't think it's just a slam dunk that the economy is going to be on great footing. I think you have to be very choosy and find businesses that are going to be able to look through this uncertainty because they have strong fundamental drivers in their businesses.
Do you have to be choosy and do you have to be nimble? Julie, this looks like a year in which volatility is going to pick up. We keep hearing day after day, well, certainly over the last few days, people talking about this is going to be the year when we could actually see a proper correction. I'm not sure we had one last year. If you do get that, do you need to pick your entry points? Is that, when you get to the end of this year, is it all going to be about your entry point as well as what you own?
Well, your entry point really matters when you're talking about your exit point. So if your exit point is like me on average every 5 years, your entry point is a little bit less important. But if you're trying to move in and out, year in, year out, and turn over your entire portfolio, then yes, your entry point really matters. So I think it just depends what your goals are as an investor. For us, as long-term investors, we're looking for fair prices. We're not trying to be smarter than the market. We're just trying to find fair prices on very high-quality businesses.
So what are those, Julie? Because I feel like now it's, where do people want to hide out? And we've seen such a solid move into value. Where do you still find the opportunity?
I think it's less about a focus on value versus growth, and I think it's more a focus on the structure of your businesses. So I still like software businesses, particularly on the small and mid-cap side, because they're a little bit less owned than the big cap tech. And they tend to really dominate their small niche markets. So, talking about, like, for example, supply chain, we know that's a place that investment has to happen. So a company like a Manhattan Associates or an SPS Commerce that serves modernizing supply chain and automation around that, that's a place where investment is going to continue for a long time. And so they have strong fundamental drivers. That's the type of business that I think is more compelling to me than an EV business or a deep cyclical.
Where do you stand on the consumer?
I think the consumer outlook is pretty mixed. On the one hand, you have higher wages at the low end, which is great for the economy because those lower end consumers, they tend to spend that incremental dollar much more quickly. But that has implications for inflation, right? The volatility of money working through the system. So I think at the low end, there's opportunities for the consumer. I would look at some of the closeout retailers. I think they have a good position, particularly with supply chain disruptions. And then at the high end, we know that that consumer is pretty strong, and as long as asset prices remain strong, they'll continue to buy.
Yeah, speaking of consumer, you got Bed Bath up like 8%. It was up at one point 15%. Before we let you go, energy up 8% in 4 days. Financials of almost 3% in 4 days. Are you betting on any of those kind of value stocks?
For us, I think those are the names that have the least amount of differentiation, and while they may be great buys in the near term, over the long term, it's really hard to be confident owning an undifferentiated bank or an undifferentiated energy company. Companies that are serving those businesses, I think, have a better position than the core banks and energy stocks.
The brilliant Julie Biel, thank you very much indeed. We greatly appreciate your time at the start of 2022. Julie Biel, Kane, Anderson, Rudnick, thank you very much indeed. All right, what do we got next? Coming up, President Biden blaming Donald Trump directly for last year's riots on Capitol Hill. We'll have more on those remarks next. This is Bloomberg.
Probiotic supplements.
For the first time in our history, the president had not just lost an election, he tried to prevent the peaceful transfer of power as a violent mob breached the Capitol. But they failed.
President Biden in the last hour speaking on the first anniversary of the riots on Capitol Hill. Bloomberg's Washington correspondent Anne-Marie Hordern at the Capitol Hill joining us now. What is the view at the Capitol? Any surprise at how strongly the president went after Donald Trump today?
I think a lot of people were very surprised and shocked because we've never seen President Joe Biden directly and squarely attack the former president the way in which he did today. I mean, he had a number of times he said he's defeated president. He also said he has a bruised ego. It got a little bit personal. He really attacked the former president without mentioning him by name. And you can see it likely struck a chord with former President Donald Trump because just following the speech, we immediately got a press release of a statement from the former president. And then a few minutes later, another press release from the former president, who was also supposed to speak this evening from his estate in Mar-a-Lago, but he's punted that to next week. He'll be speaking at a rally in Arizona. But clearly, the big takeaway from the speech from President Joe Biden was really that he laid the blame on the former president for what took place. And the imagery this president painted, he really took us back to the Confederate flags we saw in this in the scenes of the Capitol across all of our TV screens, the Capitol Police that were stomped on, and just the breach of the Capitol. He brought those scenes into Americans' memories and then put the blame squarely at the former president.
And Marie, what do the Democrats now do today to kind of keep whatever unity they can within the party to push their agenda forward, but still be able to reach out to Republicans? How do they use today?
Yeah, the unity within the Democratic Party has, it's been far and few between these moments, right? Because they've been grappling themselves with how are they going to decide on what to put in a massive legislative package, Build Back Better, how they're going to go ahead with potentially getting through voting rights legislation, given the Republicans are against it, and the filibuster rule in the Senate. So they're going to use today, there's a full slate of events. Speaker Pelosi will be speaking. There'll be a prayer ceremony. And really, a lot about today, likely for the Democrats, is gearing up as well for November, those midterm elections. We know that Democrats, or voters and independents, came out in droves when it was about making President Donald Trump really a centerpiece of why they should vote against Republicans. But it's going to be a tough fight from here on out until November, because many analysts are predicting a red wave when it comes to congressional seats and some Senate seats.
Anne-Marie, what are the chances of Donald Trump facing consequences as a result of what happened this time 1 year ago?
It's a question and no one knows, but we did hear from the Attorney General yesterday, Merrick Garland, who talked about that not one person, no matter how powerful they are, can escape the law. So some are viewing that as whether or not this potentially means the former president could become in the eye of the AG, or whether or not he's just making a very blanket statement.
Yeah. All right, Anne-Marie, thanks a lot. Really appreciate great reporting this morning. Bloomberg's Anne-Marie Hordern joining us. All right, coming up, you got U.S. hospitals facing their worst staff shortage in a year. We're going to get more on the efforts to contain the virus. This is Bloomberg.
TV.com.
We are 1 hour into U.S. trading in this really interesting trading session. Bloomberg's Abigail Doolittle is here with the movers. I mean, first, you're looking at a steep tech sell-off, down 1%, and now the Nasdaq 100 is in positive territory.
I know, it really is a very choppy, jittery day. Investors not really knowing what to make of this week's rotation into cyclical and value out of tech. And right now we have the S&P 500 down slightly. It had been down sharply earlier. That Nasdaq 100, to your point, Alex, up just slightly after being down up. There we go, a small decline. But the bigger point for both of these indexes down on the week. The Nasdaq 100 down about 3% on the week, heading to its worst week since the beginning of October. At one point, heading to the worst week since February. That was the degree of the selling. But look at the buying in the banks and energy. So that's that cyclical trade, money coming out of tech, those higher valuation companies. The reason? Well, of course, that has everything to do with rates. So we take a look at what's happening with the benchmark yield, the 10-year yield on the week. This is extraordinary. Now at 1.72%, backing up 21 basis points in just 2 days. Of course, yesterday those Fed minutes seen as being more hawkish, as the Fed is indicating they may move more quickly than previously thought. So a bit of a catch-up move to the early indications of that in December, taking yields higher and again pressuring tech stocks because of valuation. In fact, let's take a look at some of the big names. Apple off of its lows, but nonetheless down 0.7%. Rivian down 9.4%, dropping below its IPO price. This, of course, on competition. And then Tesla, one of the big stocks that's been down recently. Nvidia, now this stock has really flipped higher. It had been down 1% more, now up 1.6%. So lots of moving parts to keep an eye on here. And of course, if we take a look at the big declines this week relative to tech, this is extraordinary. Tesla losing $160 billion worth of market cap this week. Microsoft, $143. The same for Apple. And then Alphabet, Nvidia, and Meta Platforms all losing between $22 and $85 billion in market cap. Huge, huge numbers, Guy. Let's see how today and tomorrow round out.
Yeah, in terms of what's happening around this, what kind of volume are we seeing? The volatility is obviously fairly extreme. Is there an expectation that this is a move that can continue for a while? Or is the sense maybe from a technical point of view that we're nearing the end of it? What does it look like?
I would say that the technicals do not support that we're near the end of it. If you recall, last year we took a look at the Apple chart, which the stock very extended above that 200-day moving average, and the RSI, the momentum was rounding down. At this point, we do have averages flipping to the upside, but the Apple technicals, and that, of course, is the biggest weighting to these major averages, suggest that there could be a little bit of an issue. And also, Guy, this is something very interesting on Apple. Last year, growth for the top line, I believe, was 33%. The bottom line growth, 72% on a year-over-year basis. This year, it's estimated to be low single digits. That could be a problem. So that's a stock to definitely keep in mind as we go forward.
Abigail, great stuff as ever. Thank you very much indeed. Bloomberg's Abigail Doolittle. Let's turn to one of the stocks that Abigail was mentioning, Rivian. Huge move. It's not just today. We are off our lows. We were trading a few moments ago below the IPO price. Over the last 3 days, the stock is down currently by just over 20%. Ed Ludlow has been covering this stock really since the get-go and was certainly very plugged in on the IPO day. Ed, let's talk about what is happening here. You've got a couple of things, one of which is you're getting this kind of big picture macro move as a result of the Fed. But we also had the Stellantis news yesterday with Amazon. This looks like a double whammy for Rivian.
It's a double whammy. There's been a pullback from EV stocks generally. Remember, these have stretched valuations, which is being kind, if we're being honest. And there's growing competition. You know, there's not only one option now in Tesla, there are many, and investors are trying to wade through that. But the reaction is directly to the Stellantis-Amazon tie-up, which is surprising, because we've known for months that Amazon is able to do deals with other automakers. It was spelled out explicitly in Rivian's S1 in October. It's not a surprise to anyone. I've put it in dozens of columns and stories on the Bloomberg terminal. So the reaction is sharp, and it is a little surprising.
Well, Ed, that brings the question to me, is that who was invested in it to begin with? I mean, if someone was really looking through all the numbers like you're talking about, you knew the disclosures, you knew what you were buying. So I'm wondering if it's just a lot of retail guys in there now trading it.
We won't know for certain. I don't have a concrete answer, but this was a really oversubscribed IPO. Retail investors were desperate to get in on the act. a lot of shares were held in big blocks for institutional investors, big name institutional investors. You'll remember that they offered just 0.4% of the offering on SoFi, and in some cases, SoFi was only able to give those retail investors a single share. So they may have requested 10 or 100, and that's how they did it equitably. They said, sorry guys, we're way oversubscribed. Here's